Bitcoin spot ETFs recently came to the market. Should you buy one? Let's talk about it now. Hi, my name is Eric Blattner with Divvi Wealth Management, and thanks for watching. Before we turn our attention to the topic of the day, I want to first remind folks that if you enjoy hearing about our thoughts and comments, the best way to follow along is to go over to our website. It's divviwealth.com. That's DIVVI wealth.com, and sign up for our blog. From there, we typically send out updates about once a week, comments, observations around markets, planning topics, things of that nature. They're hopefully topical. Or you can go over to YouTube and search at Divvi Wealth Management and subscribe to our channel there. So with that being said, let's talk a little bit about Bitcoin. So we're recording this in early January, and very recently, the SEC approved a spot Bitcoin ETF structure. So we get asked about Bitcoin, we've been asked about Bitcoin pretty regularly over the course of the last couple of years. And now with a new structure, a spot ETF structure available to investors, of course, we've been asked by friends and clients, should we invest? And so we wanted to try to address that question directly and also do it in a way that hopefully we understand this is for educational purposes. We're not really giving specific advice. We want to acknowledge that everyone's situation is different. But more importantly, we wanted to try to provide at least one framework for how to think about Bitcoin or whether or not you might want to include Bitcoin as a part of your overall investment portfolio. So that's what we hope to accomplish today, at least in small part. And then we do expect to actually add to this over time to address some further questions, provide some further education, things of that nature that might be useful for folks that are considering investment in Bitcoin or other cryptocurrencies. So let's start by just talking about first and foremost, does this change anything fundamentally about Bitcoin? And at least from our perspective, the answer is no. Especially if you have a view on Bitcoin and cryptocurrencies, the news in early January about the approval of this structure and the launch of 11 new spot Bitcoin ETFs probably does very little to change your perspective. If you were already a Bitcoin bull, chances are this added to your conviction in the long-term thesis for Bitcoin. If you were a Bitcoin skeptic, this probably did very little to change your view about Bitcoin as well. So from a fundamental perspective, it really doesn't do anything to change what Bitcoin is all about, how it operates. More than anything else, the only thing it does change is perhaps opens up an additional pool of investors that might be able to gain exposure to the asset. And so Bitcoin itself, it hasn't been terribly difficult to access or to get exposure for the last 10 years or so. Generally, investors would have gone to an exchange and purchased the Bitcoin, and then they would have either kept it on the exchange or one of the cold storage options, or maybe taken those coins and moved them to a cold storage device that they would store on their behalf. The spot ETF is just a different structure. It's a regulated product that investors can now trade and own just as they would an ETF that might track something like the S&P 500 or a small cap index of stocks or an ETF that tracks international stocks. By now, I'm sure you're aware there are many different ETFs on the marketplace. They either track indexes or even a structure that allows active managers to deliver their strategies in that particular vehicle. So in and of itself, we don't think it really changes anything fundamentally about Bitcoin. If anything, it probably helps widen the universe of potential investors, folks that might be most comfortable transacting on an exchange in a regulated product like an ETF. So next, we wanted to spend a little bit of time talking about some of the pros and cons. A little bit about the ETF structure for Bitcoin specifically, but also just about Bitcoin as part of your portfolio. And so, we don't have time to go into a comprehensive overview of, whether or not you should or should not own Bitcoin. Again, our perspective, everyone's situation is different. And I did want to include, though, at least from my perspective, this is just my opinion only. Two of the main reasons why why this news might be encouraging for folks who are proponents of Bitcoin. And the first piece I would call out is diversification. And generally, when we are trying to build investment portfolios, one of the things that we try to do is piece assets together in a way that lowers the overall volatility of the portfolio. And we think that by doing that, we can have better compounded returns over very long periods of time. And so traditionally or academically speaking, the way that you bring down, or one of the ways that you can bring down volatility within a portfolio, is you add assets that have a low correlation to the other things that you already own. And what do I mean by a low correlation? It means that when that they move independently from one another. So generally speaking, if Pepsi is rising over time, in a lot of cases, Coca-Cola stock is also rising. That's just an example. So stocks and bonds over different periods of time have had stretches where they've moved kind of directionally in the same way. They've had periods of time where they've directionally moved in opposite ways. And when we've looked at Bitcoin, particularly going back to late 2014, when we start to have some pretty reliable data on the daily price changes in Bitcoin, you can see in this chart here that over time, Bitcoin has generally had very little correlation to asset groups that many of us investors already have exposure to: stocks, bonds, and real estate. The green line represents the correlation, the correlation between Bitcoin and stocks, the S&P 500. The orange line represents the correlation between Bitcoin and bonds, and then the dashed dark line represents the correlation between Bitcoin and real estate. So what you can see, and these are rolling 3-year snapshots, and it starts all the way back in, again, late 2014 through 2017. And those 3-year rolling snapshots, you will see that they generally don't have a correlation to Bitcoin greater than 25%. In many cases, it's pretty darn close to zero. And if you looked at the average of all those 3-year correlations, what you would find is that those correlations are basically zero to stocks. They're slightly negative for bonds and for real estate. So from what's the punchline? Back to the diversification argument. One of the things I think a reasonable person could come away with is that adding Bitcoin could potentially lower the volatility of your portfolio. That's based on the historical performance of Bitcoin, the historical, the track record, the monthly ups and downs, things of that nature. So that might be one reason that owning a little bit of Bitcoin could make sense. The second reason is, I think, there's no reason to guess, but I would suspect that this would be the primary reason that folks are buying it. Yes, there's that whole academic idea of lowering correlation portfolio that's really technical and kind of dorky, which is why I get excited about it. The other reason that's probably a little bit more fun is FOMO, or fear of missing out, and it's insurance against that. So if you've been to a cocktail party or you've talked to neighbors about investments, and if you've heard stories about particular investments that may have done extremely well, it's only natural that you're going to experience a little bit of emotion around that. And generally, whether it's jealousy or it is FOMO, fear of missing out, the idea is pretty simple. When we hear about Bitcoin, when we hear about cryptocurrencies, and we hear about some of the folks that are talking about the potential future for Bitcoin as a digital currency, the potential, I think it's easy to hope that future becomes reality. And if it does, you may want to have a chip at that table. So by not owning Bitcoin, there's basically going to be, you're exposing yourself to that risk that it does extraordinarily well, and many other folks participate in Bitcoin's gains, and you are left missing out. So having a little bit of Bitcoin is a behavioral way, it's a behavioral approach to finance, to investing, that says, okay, I acknowledge that I don't know exactly what the future is here, but I'm willing to allocate a certain percentage of my investable assets to this vehicle, to this investment, to this Bitcoin ETF, just in case. Just in case it really is one of the next big things over the course of the next 10, 15, 20 years. And if it does materialize, if that's the case, I'm going to want to have a little bit of exposure there, and I'm going to want to have something called regret avoidance. So, ultimately you're kicking yourself, I should have known, or you're going to say 20 years ago, I just would have bought that. By owning a little bit of Bitcoin, you can essentially take that outcome potentially off the table. The caveat that I would mention is that generally when we do this, our suggestion is to go in with eyes wide open and really only do this with amounts that you are comfortable losing in their entirety. In my views, Bitcoin and cryptocurrencies are still speculative investments and should be thought of as such. So if you're going to take that approach where you want to have some regret avoidance investment in a Bitcoin ETF, our suggestion would be keep it within reason and only invest with money that you're comfortable losing. So again, not necessarily advice, education, just kind of rules of thumb that we think about internally. Now, what about the cons? So I mentioned the top two reasons that I think investors may want to entertain Bitcoin. To me, the top two reasons that folks would generally not get excited about this new ETF structure would be the first and the biggest. It goes back to that idea that if you were already a skeptic, you're still a skeptic. There's still a greater than 0% chance that Bitcoin and cryptocurrencies are just a modern day Ponzi scheme. And modern day, I don't know if that word is faux pas, but the idea that it's all smoke and mirrors. There have been some very loud and well-respected skeptics of Bitcoin that have suggested it is it's really nothing more than just that. So they've talked about the ideas of this tulip mania from the 1600s when individual bulbs were rising by tenfold over the course of weeks. And there's the South Sea Company bubble where you had enormous speculation in a particular company, and ultimately that went bust. Some folks still believe that Bitcoin and cryptocurrency is just a modern day version of something like that. I think only time will tell. And again, as someone who's considering an investment in Bitcoin or a Bitcoin ETF, I think the wise approach is to at least acknowledge that the probability of that outcome is not 0%. It's some positive number. I don't have any idea what the number is, but I don't think it's zero. And so acknowledging that might help right size the investment into a Bitcoin product or a Bitcoin ETF, thinking that there is still a chance that you could lose everything you invest. It's a very real possibility. And there's always the idea of just owning it directly. So we mentioned at the beginning that it might open up or expand the potential pool of investors that are comfortable trading on exchanges and regulated products. Again, there's other avenues of owning Bitcoin. And the one downside, but something that folks should be considerate of when they go in and buy the ETF is there is a management fee. And so when we think about if we were to ever get exposure for clients within a Bitcoin ETF, assuming all other things being equal, that they all have enough assets to have plenty of liquidity, that there's plenty of trading volume, that you have bid-ask spreads that are really, really wide that act as extra fees when we transact. So all those things kind of, I think, are worth considering, but all those things being equal, at the end of the day, getting exposure to Bitcoin is the goal. So we want to do that as cheaply as possible. So of those 11 ETFs, they're going to have different fee structures in each one of those individual products. And we would encourage investors to look at those individual fees and understand exactly what it's costing you to own Bitcoin. So some folks may be more comfortable just going directly to an exchange like a Coinbase, and I'm not advocating or endorsing anything in particular, but those avenues are available to for folks that would prefer to go and transact and own the coins directly. The last thing that I want to touch on here, and I know we're probably already running a little bit long, why do we not include Bitcoin in our discretionary portfolios for clients? And when I say just discretionary portfolios, clients of Divvi Wealth Management typically give us discretion to manage investment portfolios on their behalf. And that means that we're ultimately responsible for crafting their investment policy statement and choosing the investments that we believe are in our clients' best interest, that allow them, to give them the best opportunity to accomplish the things that they need to accomplish. And Bitcoin is currently not in something that we include in discretionary portfolios, and the spot ETFs don't change that view, at least not right now. And the main reasons that we think about that as fiduciaries for our clients, we need to be able to build portfolios and include assets where we have a reasonable way of forecasting expected returns, volatilities, correlations, and trying to build a portfolio that's going to give our clients the best odds at accomplishing things that matter to them. And right now, we really have very little confidence in our ability to do that for Bitcoin. Now, 2023 was a wonderful year for Bitcoin returns. Will 2024 be a great year? Will 2025 be a great year? What's the 10-year outlook for Bitcoin? To be honest with you, I have no idea. And for those reasons, we don't proactively add it to discretionary portfolios. Now, does that mean we would never own a Bitcoin ETF for clients? And the short answer is no. And so within the context of an investment policy statement, we do think it's important to carve out a piece for what we consider speculative investments. And this is, again, one of those behavioral issues that, to the extent a client's plan allows for them to invest in areas that are higher risk, but that they have personal reasons for wanting to invest in those areas, we think it's important for them to be able to do that within reason, within the construct of their overall plan. So carving out a piece of that within the IPS would essentially give us a way to allocate towards things like this, that we would consider speculative, but also are controlled in a way where we think that any type of outcome is not going to have a hugely detrimental impact to your ability to accomplish what matters. Hopefully that makes sense. I wanted to end with a couple more charts here that just kind of illustrate that point. So again, this data goes back to about 2014, and you'll see that investors, by and large, have generally done very well. If you've been an investor in Bitcoin during that entire time frame, you've done extraordinarily well. However, it has not been a smooth ride. There have been 3 individual periods when you've lost at least 60% from the previous peak. This is called a drawdown chart, and it shows you how much the price of Bitcoin has fallen from its most recent high. And you see these 3 dips where it actually touches 70% 3 different times, where it starts to go down, down, down. Investors would have lost 70% of their value 3 different times over the last, call it 10 years or so. So do you have the stomach for that? Again, be really honest with yourself. Go in eyes wide open. If you do, great. If not, just understand that on the front end. And lastly, let's kind of end with this idea of volatility. So it's a similar conversation with the chart that we just had, but Bitcoin and cryptocurrencies in general have had extreme volatility by virtually however you want to measure it. And this chart looks at the monthly price swings for Bitcoin. That's going to be the green line, and then the orange line is stocks, the S&P 500. So you can see, stocks by a lot of investors would consider stocks to be one of their more volatile pieces of the portfolio, and you can see how they compare relative to the price of Bitcoin over time. Bitcoin has had much greater volatility on a month-to-month basis. Again, just understand exactly what you own, why you own it, and make sure you're comfortable with these types of price swings. So with that, we'll wrap for today, but I'm sure we'll have more thoughts around these Bitcoin ETFs. If we have specific questions that you think would be important or helpful for us to address, let us know. We'd love to have your feedback. But until then, thanks again for watching. And again, if you enjoy watching some of the thoughts and the comments that we have, best places to follow along are going over to DivviWealth.com and sign up for our blog. That's DivviWealth.com, or go to YouTube and search at Divvi Wealth Management to subscribe to our channel there. Thanks again. Have a great day.